Now, on Emeritus Newsbrief, I'm Lynn Houston. Democrats and Republicans battling it out over the extension of unemployment benefits. 2 votes have been delayed. That story coming up in just a moment. But first, another sobering assessment for the U.S. banking industry. During a hearing before a subcommittee of the Senate Banking Committee, Comptroller of the Currency John Dugan says credit conditions remain poor.
The strains on borrowers that first appeared in the housing sector have spread to other retail and commercial borrowers. For some credit portfolio segments, the rate of non-performing loans is at or near historical highs.
Federal Reserve Governor Dennis Tarullo says much of the banking system is still not functioning effectively.
I suspect, though, that more direct efforts may be needed to make credit available to some credit-worthy smaller businesses. Congress and the administration may wish to consider temporary targeted programs while conditions in the banking industry normalize.
And Timothy Ward of the Office of Thrift Supervision doesn't see that the economy has hit bottom yet.
Although sustainable loan modifications and payment plans to avoid foreclosures are increasing, the number of seriously delinquent mortgages and foreclosures in process are continuing to rise. Progress is being made on this front, but when so many American families are losing their homes, the progress certainly does not seem to be fast enough. In summary, Mr. Chairman, it's too early for us to say we have hit bottom and the worst is over. We believe significant challenges lie ahead as unemployment continues to rise and the housing market continues to work its way through a significant down cycle.
FDIC Chair Sheila Bair says more bank failures are expected, but depositors' money will be saved.
Poor credit quality and weak earnings have led to a surge in bank and thrift failures. So far this year, we've had 98 failures. While we do not expect failures at the levels experienced in the late 1980s and early 1990s, our loss rates have been significant. To address adverse market conditions, the FDIC has employed additional resolution strategies that proved successful in the 1990s, loss-sharing agreements, and structured transactions. These arrangements allow the FDIC to quickly return assets to the private sector, obtain better pricing, and minimize disruption to borrowers and communities from a bank failure. They save money for the Deposit Insurance Fund and streamline our resolution workload. As a result of increased bank failures, the Deposit Insurance Fund is projected to need a new infusion of cash next year. To meet the fund's liquidity needs, we are seeking public comment on a proposal to collect $45 billion through a prepayment of deposit insurance assessments instead of a special assessment. In addition, we are implementing a restoration plan that should return the fund to a positive balance in 2012 and the reserve ratio to the minimum of 1.15% within the statutory 8-year time frame.
Meanwhile, Special Inspector General Neil Borofsky says AIG, the bailed-out insurance giant, doesn't have a full understanding of how its own bonus programs worked.
Did AIG ever really know where all the money was going?
As of the time we concluded our audit work, that is correct. They did not know. This was an incredibly decentralized system. It was, as I mentioned in my testimony, a mess.
There's a breakdown in communications between Treasury, of course, and the Federal Reserve regarding AIG's plan.
I think that would be kind to have it as a breakdown. I think that they were essentially, after Treasury invested the $40 billion, communications were virtually non-existent.
Right.
Borofsky says that bonuses the company claimed were being used to retain critical personnel to complete sales deals were actually being passed to thousands of employees. A kitchen assistant was paid $7,700 and a mailroom assistant was paid $7,000. Also, the Inspector General's office concluded the bonuses were legal and binding. Some AIG executives promised to return their bonuses, but less than half of them have returned the money. More, including the Special Inspector General's actual report on the Emeritus News business page. On Capitol Hill, legislation to extend unemployment benefits has turned into a battle over how to pay for it. Democrats had proposed extending the federal unemployment surtax through June 30th of 2011. But Republicans say that's unfair to businesses and that the extension should be covered by unspent stimulus money. Arizona Senator John Kyle was able to kill 2 votes, including one on Tuesday. A source in Majority Leader Harry Reid's office tells Emeritus News negotiations between Democrat and Republican leaders leaders are continuing. Another big recall from Ford connected to a cruise control system that can catch fire. More than 4 million vehicles have been affected by the recall, which actually is an extension of a recall from June of 2008 for the same problem. More on the Emeritus News consumer page. The Government Accountability Office says the FDA inspection program for imported foods is flawed by poor communication between agencies and procedures that allow food to be delivered at U.S. ports without the FDA even knowing about it to make an inspection. The GAO report says all this increases potential risk for American consumers. Also on the Emeritus News homepage, the CBO issues a report on the economic impact that climate change legislation will have on American households. The latest on the biggest issues and public policy at emeritusnews.com. And live 24 hours, 7 days a week on the Emeritus News channel at livestream.com. That's an Emeritus News Brief. I'm Lynn Houston.